I'm Cody, Rise Realty's listing specialist, and I'm going to do a little market update video for you guys, show you kind of what's going on in Bonneville County the last couple months and recently, and just kind of go over some stats and some numbers with you. Okay, let's dig into these numbers here. So Bonneville County got new listings in blue, closed in orange, and pendings in gray. So back here in March, we had 247 new listings. That went up to 287 in April and 324 in May. So that difference between 324 and 247 was an 87% increase in new listings. So that's our jump in inventory in those couple months. Then we started to taper off a little bit. We've leveled out on new listings, so sort of normalizing. We have an uptick in pendings compared to last month, though. So 139, 219, that is a difference of 57% there, increase in new pendings. Bonneville County months of inventory. We're at 2.8 months of inventory. It would take 5 months to become a buyer's market or a balanced market, and up to 7 months would take for us to get into a buyer's market. So still in a seller's market, 2.8 months of inventory. What that means is if everything stopped coming on the market, it would take 2.8 months for everything to be bought up at the current rate of consumption. Bonneville County, some additional stats here. We got average days on market is up to 52. That was about 14 back in March and April. Average sold price is $444,000. And our current active single family condo twin homes is up to 468 total actives right now in the county, which is up from 173 in about March, which is a big increase. So here's just some other things. Interest rates have caused buyers to reassess their situation, just take a step back, figure out what their finances look like, recheck on what kind of house they can actually afford. Sellers pricing in the new market. We were seeing prices go up so fast that sellers were able to just pick a price up above sort of what the comps were saying at the time, and people were buying them. And now the market's stabilizing a little bit. You really have to be on the ball on where you price your property if you want to get it sold. Buyers are not even really going to look at prices or houses that are overpriced by even a small margin. They're really just going after values and houses that really, show well. Buyers have gained more negotiating power, so they've taken that market share back with the rise in inventory. They're able to be more picky, start to ask for closing costs on their offers, and actually asking for more items to be fixed on their ICNs as well, the inspection contingencies. Home price appreciation projections, if you want to Google this, you can see that they're still showing them to be the values going up over the next little while and into the next coming years. It is definitely slowing down. It's not as extreme as it has been the last 2 years, but they're still projecting it to go up from here. The market is definitely normalizing. So this is more of a normal market. What we've seen the last 2 years has not been a more normal market. This has been a kind of extremely low inventory and higher demand mixed with that. It makes prices go up and houses selling super quick like they have been. This is a more normal. We're seeing more normal days on market, 30, 40, 50 days. Should you buy? If you have a stable income, and that's definitely comes down to your personal finances and your job, how stable you think your income is going to be. If your house payment fits within your budget, that's a big one, because if you get a payment over what you can afford, that's going to be bad news for you. And then if you plan on living in your house for a minimum of 5 years, say 5 to 7 years, that's your safest bet. In real estate, the longer you stay in, the safer the investment becomes. All right, well, that's all I have today. Thanks for sticking around to the end. Like, comment, and share. Let me know if you have any questions, concerns. Let me know. Thanks.